One of the big thematics at the moment is the Aussie dollar, fallen 4% in the space of a week. The predictions are that it will go lower. What do you think, Chris? Do you think that is the case, and how will it impact our market?
Look, clearly we've seen a sell-off in the Aussie dollar, particularly last week, with the scope for interest rates to go up in the US over the next 12 to 18 months and our rates staying on hold. We think there's certainly a lot of downside to the Aussie dollar from these levels, with iron ore continuing to remain at depressed levels as well. So, and you've seen that in the market, particularly in the last few weeks with a major sell-off in the banks. So it looks like a lot of capital going back home offshore there, selling the banks, selling Aussie stocks.
Give us a forecast.
Look, we think the Aussie dollar will have a 7 in front of it over the next 1 to 2 years, and we're looking for stocks at the moment that have got exposure to that, and we think one is ARISTOCRAT, taking market share off Ainsworth here in Australia, but a large part of the business is in the US, and they'll get a big tailwind, we think, from if that prediction does turn out to be correct in terms of the Aussie dollar falling to around that 75 level.
Are you in the fall camp, Steve? Do you think it'll fall that far?
Look, we've got more than half of our portfolio at the moment either directly invested in stocks that have overseas assets or stocks with a lot of foreign currency exposure. So we're certainly positioned for that scenario. Currencies are very good at making fools out of people. So whether that happens in the next 6 months or the next 18 months, I don't know. But we've had a long-held view that Chinese growth model is unsustainable. They can come out with another stimulus program, but it's only going to last another 6 months. I think there's lots of problems in store for Australia there, and we actually need that Australian dollar lower. So I think there's going to be a lot of help from the Reserve Bank to get that dollar lower to try and help our economy adjust. So positioned for it, and yes, I think it will over 18 to 24 months.
Well, give us some stocks since you're positioned there.
Yeah, our biggest holdings are RNY Property Trust. We own MIRVAC Industrial Trust. They're 2 pure US commercial property trusts. And we've got big holdings in 2 Australian IT companies that earn most of their revenue overseas, GBST and Hansen.
Why has the dollar fallen now? We've known about commodity prices fallen. We've known about maybe US interest rates going up probably for 6 months or more. All of a sudden, it's falling.
Well, it's the iron ore price. I think most people were very surprised that it held up as long as it did, including us. But with the iron ore price falling as low as it has, I think once it went below 90, it broke a psychological level out there where everyone went, oh, hey, this is serious, and started to sell the Aussie dollar as well. The US dollar's been very strong against all currencies around the world, though.
Is a lower Aussie dollar good for the economy, Chris?
Oh, look, we think so from a longer term perspective. We've had it trading well above its longer term averages now for almost a decade. So we think that it certainly will help, particularly in terms of monetary policy here in Australia. That's something that the RBA are watching quite closely and are jawboning their way through it in terms of trying to get that Aussie dollar to trade lower. So we think certainly from a longer term perspective it positions the Australian economy very well.
Do we get a cut off the back of it?
I don't think so. I think that the general economic conditions remain okay. We're certainly obviously keep a close eye on that inflation, or important inflation number, but we think interest rates stay where they are for at least 1 year.
Thank you very much.